real economy, and we are in Europe's financial capital to delve into the psyche of the international investor and their relationship with Europe right now. On the show, we'll explore the trials and tribulations of the European markets over the past couple of years through the eyes of both international financial and direct investors. We'll then also talk about the shifting sands of perception and global economics with Sugiro Takeshita, director of one of the world's foremost financial institutions, Mizuho International. Every investor has a different risk appetite. Some like to play it safe, others risky. Some chase yields. Some think long-term, others in just a few minutes. So here's our crash course on what drives risk appetite.
Risk appetite boils down to whether an investor is willing to take a gamble and at what price. It's essentially how investors perceive and react to an uncertain situation, which can be driven by the macroeconomic environment, from GDP to employment or even natural disasters. The level of risk investors are willing or unwilling to accept determines their appetite. Some move to safe havens where risk is low. Others, willing to brave higher levels of risk, know the rewards could be high as well, but always with the inherent danger of losing. The big return required to compensate an investor for holding a risky asset is called the risk premium. It's determined partly by the riskiness of the asset and partly by the level of risk appetite. The higher the appetite for risk, the lower the risk premium.
Risk appetite seems to be back even as companies cautiously hold on to cash. The equity markets, for example, bounced back in 2013 and then now into 2014, buoyed by a fragile recovery. Financial investors are out looking for yield in Europe as global interest rates are at their lowest. A changing picture, as Gianni Maggi explains.
In London, Pippa Malmgren's day begins before dawn with the first of a long series of appointments. This Washington native is a leading international finance expert, a former advisor to President George W. Bush. Today she heads an investment firm advising clients where to put their money. She recalls the impact to investors when the crisis first hit.
I think shock is the right word. And investors everywhere in the world were suddenly so surprised. The immediate reaction is to withdraw. And that happened in every possible way. Withdraw from the equity market, withdraw from any kind of risk, and take no decisions. Relatively, the world chose the US as a safer place to put capital at that time.
There have been many consequences of the crisis for investors in the Eurozone. The most obvious was the spread in yields between various government bonds and the benchmark German Bund. Spreads are now returning to relatively normal levels after the worst of the crisis in 2011.
The reaction to the crisis has taken a heavy toll on the Eurozone and even left a lasting mark on the attitude of international investors towards Europe. Although the basic objective has not changed, that is, the maximum profit from investment.
What has changed, though, is the balance of power between the state and the market. The state now has much more significant influence, and in fact, governments are the biggest players in the market. The ECB has become the most important player in the market in Europe.
The markets were shaken when money was withdrawn to safe havens, but the equity or share markets bounced back as the returns were high compared to government debt markets.
One thing it didn't change is investors are always looking for profit opportunities. And they've just moved. They're in different locations now for different reasons. But money's like water. It looks for where is the profit, and it will find its way to that place.
Among the consequences of the crisis for Europe, it's been forced to boost competitiveness to compete with the emerging markets for the attentions of international investors.
One of the side effects of the financial crisis has been the realization that in the industrialized world, Europe and the United States, people are tightening their belt and they are rationalizing what they do, which makes them more competitive. So it's a dynamic picture, but yeah, Europe is a place you will always find some profits.
So let's go a little bit deeper into how international investors really perceive Europe and how they make their investment decisions. Joining us now as our guest is Sugiro Takeshita. He is director of Mizuho International. Sugiro, we've seen Europe go through a lot of pain. Where exactly are we in the risk appetite barometer?
I think risk appetite is coming back a bit. Of course, we have the austerity problem here in Europe, and we have the emerging nations problem propping up all the time. But it's definitely clear that at least it's definitely much better than, let's say, 3-4 years ago. And we are definitely on a revival trend as we speak.
We're seeing deflation becoming a bit of an issue. It's very similar to your experiences in Japan. If you had to compare the two, how would you see it?
But the biggest difference between Japan and Europe is that Japan is a unified nation with one central bank. However, in case of Europe, it's a lot more complicated. From my point of view, it is a mess. And you don't always have the flexibility and maneuverability of trying to get out of the mess by maneuvering your foreign exchange rates. So you have a double negativity in Europe as far as I see. And let me warn you that going through deflation or trying to get out of inflation is much more stickier than any other thing that you've experienced, including inflationary fears.
When you look at how, say, for example, different kinds of investors are viewing Europe today, is it a completely new situation we're dealing with?
The Americans and European authorities and economists who's really bitterly criticized about the Japanese methodology of bailing out the banks, private sectors being bailed out by the government, etc., has been exactly repeated in these nations. Nowadays, the world has shrunk so much that elasticity and movement of one country could affect the other so quickly that we're virtually in the same boat. So the unified consensus is something that's really different from when Japan was going through the mess and this time around. For example, central bank intervention. Now you're not seeing singular intervention, but you're seeing jointed effort interventions. In that sense, I think there's a much better methodology to reduce the risk from having a domino effect.
We saw people run to safe havens at the worst of the crisis here in Europe, and now it seems to be we're running after yield. Is there a mindset change that's happened?
During the aftermath of the Lehman crisis, we thought the world's going to end. It is not. And I think we'll be facing probably an emergence of new war in many senses. That is the war between the non-liberal governance and liberal governance, i.e. The Japanese, the German type of method, which tend to perform very well under stagnant times versus the American method, because like in Europe, you're seeing both the liberal and non-liberal fighting out with each other. For example, Germans and many of the other nations, like in Southern Europe.
When you look at, say, for example, how sovereign debt yields have dropped, yet you see corporates hold on to their cash, where exactly are we in your mind when it comes to a recovery?
For example, in Japan, what we're waiting for is capital expenditure. That's spending by the corporations come back, because then the cycle of wage increase would take place because corporates would make more profit. But do you see that cycle in Europe? You don't. And that's total lack of confidence and increasing doubts about the emergence of a divide within the region. And that's in minds of most of, I think, overseas institutional investors, especially the Japanese. When they look at Europe, we see the U.S. economy coming back to its knees. We see emerging markets starting to settle down. And that's one of the biggest reasons that, the risk appetite is coming back. And in Asia, if you look at it, well, China has its structural problems. We think that things are going to get worse from here because they do have a bubble. But we have Japan as a good, strong resurgence that are coming back. I think FDI will increase. It has to increase. The cash regressing back to conservatism and holding cash often is a risk itself.
The US has been the biggest direct investor into Europe both before and during the crisis. But interestingly, the biggest growth in investments has come from China and Hong Kong. The BRICS might have their own economic troubles back home, but as Sebastian Lebelzik reports, their strategy now is to get a strong foothold into Europe.
The Chinese are coming to Portugal. Since the launch of a privatization program as part of a rescue plan, 3 big investors have seized opportunities in the insurance and energy sectors. Over the 3 years of the privatization initiatives, some 8 billion euros have poured into public coffers, more than half of them from Chinese investors.
There are a lot of investors using the privatization of the companies, the national companies. This is one movement, but the other movement is more connected with the residency permit.
The so-called Golden Visa programme also gives those investing more than €500,000 a 5-year residency permit. Edmund João is among 228 Chinese taking advantage. He now owns 5 villas on the Portuguese coast.
It's really worth investing in Portugal. You spend €500,000 and you get a house, and you can even bring your family over. The children get a good education and the old folks are cared for by the health service. It's a great investment.
This road to Evora takes us far from the well-heeled suburbs of Lisbon and Chinese investment, but it's here, in this poorer Portuguese province, that one of Brazil's biggest businesses is investing.
The Brazilians take a different approach. With European Commission support, Embraer, the world's #3 plane maker, set up here just under 2 years ago. With a staff of 220, it's already the largest Brazilian company in Portugal. For Embraer and compatriot giants Petrobras and Odebrecht, Portugal is a door into the European market.
We're continuing to invest in Portugal in our 2 factories, which are doing well, and we're continuing to invest in Europe. Europe is a very important region for us. We have hundreds of planes here. We have clients who we support with technical support. For us, Europe, in crisis or not, is very important for our business.
Brazil, with China and Hong Kong combined, are already the 4th and 5th largest investors in Europe. The inward flow of Chinese capital has increased strongly, up by 155% between 2009 and 2011. And for Portugal, this kind of investment provides a springboard for recovery.
That's a wrap on Real Economy. In the next episode, we'll talk about the housing market and you. Until then, thanks for watching. See you next time.